In this video, I'm going to be showing you guys a very easy to use trading strategy. It's a very simple price action strategy called the head and shoulders pattern. This strategy works on all time frames and on all markets. It works on the Forex market, the crypto market, the commodities market, and the stock and cryptocurrency market. So I'm going to show you guys exactly how it works and how you guys can implement this in your trading so you guys can start trading profitably and trading strong. So let's get into the video. The head and shoulders pattern is a very interesting and simple chart pattern that a lot of traders use. It's very widely known and it's very popular in the trading industry. It's a trend reversal pattern that happens at the end of a trend. Like if you have an uptrend going on for like 2, 3 days, 4 days, 5 days, when the trend is about to reverse, when the trend has been exhausted, then you get a head and shoulders pattern, and then the trend reverses back to the downside. And same for the downside. If you have a downtrend and you get this pattern, you can expect price to reverse to the upside. So this is kind of like a variation of the double top and double bottom pattern. Just has a third, I'll say like a third leg, but the third leg is kind of below the second leg. So let's get into the video and let me show you just how it works and how you guys can trade this strategy. The name comes from like if you imagine a person, a human being. You have the shoulder of the person, the head of the person, and the second shoulder of the person. So you have the left shoulder and the right shoulder. So that's where the name comes from, basically. So this pattern comes up when you have an uptrend. The normal type comes up when you have an uptrend, and then the trend is about to reverse, and you begin to see some kind of choppy behavior, it kind of loses its theme, loses the boost, and begins to chop and form like a head and shoulders pattern, and then you get a reversal from there, right? So there are two types of this pattern. This is the first type, the normal type, and then the inverted one where you're taking the price up. So this is the inverted one. This is when you have a downtrend. When you have a downtrend and this pattern forms up, you can basically expect the price to reverse back up, right? So I told you before that this is kind of like a variation of the M and W, or rather the double top and double bottom pattern. So we have a downtrend here. I see the price formed a W or a double bottom right here, and then gave a third leg, which is the shoulder, the right hand shoulder, the second shoulder, which forms up this head and shoulder pattern. And the way some traders use it is when to predict where the shoulder is going to come up, they kind of like draw a Fibonacci from the head to the shoulder, and then you look for like a sniper entry here. If you were using the Fibonacci, you would have entered on this hammer candlestick here and then taken it up, but I'm going to show you just the basic one in this video. So we can see in this pattern that we have the shoulder, head, and the shoulder, and then we have a neckline. The neckline is usually, most of the time, 90% of the time, a support or a resistance. That's what forms the neckline, right? The resistance. So we see price came down here, pull back, and broke through that support, and then the support turned resistance. And then anytime the market goes back up there, you can see it rejected that zone and then forms the head and shoulders. Once it forms the head and shoulders, we know that this resistance area here is the neckline, right? So what we're basically going to do is we're going to wait for price to break through this neckline. That's when you can start looking for your entries, right? And then we can see here that once price broke this, it's run back up, reversing the downtrend that was originally there, and then reversing the trend with the head and shoulders pattern. So basically we wait for the neckline to be violated before we look for an entry, and when we look for that entry, we look for price to move at least the length of the pattern from the neckline to the head. You can look for at least that move. So if this range is from the head to the neckline, the range is 50 pips, then we can expect when they break the neckline for market to first move 50 pips, right? Here's another example. We have a downtrend here, we have support here, and then the market breaks through that support and forms a left shoulder, head, and then the right shoulder, right? This is the, what's it called again, the neckline. Yeah, this is the neckline. You can see it forms a resistance right there, and the market begins to reject that area, forming the head and shoulders, and then the market breaks through the neckline, then we begin to look for an entry. So I'm about to show you, like, there are two types of ways to trade this. There are two ways to trade this pattern, and I'm going to get into that, so stick to the end of the video. Here's another example. In an uptrend, we're going to be looking for the left shoulder, the head shoulder, and the right shoulder to form completely and then break through the neckline, like we see here, reversing this uptrend and becoming a downtrend. So there are two ways to trade this pattern. The first way to trade this pattern is the breakout, right? There are two ways. The first one is the break, the second one is the retest. So with the breakout, we're going to wait for the market to break through the neckline. Once the market breaks through the neckline, we enter the trade here. In this case, you enter a sell position because this is an uptrend and then you're looking for sells. In a downtrend on the inverted head and shoulders, then you'll be looking for buys. So this is the breakout of the neckline, and then we'll take a sell here. This is kind of like an aggressive type of entry. The second type is it's more conservative, is if you want to take the safety measure and wait for the retest. So the second type is the retest, when you take the zone retest entry, right? We wait for, after the breakout, we wait for price to retest the resistance, the support that's on resistance, because originally it was the support, now it's the resistance. So now we wait for price to retest that resistance and then look for like a candlestick pattern or confirmation, some other confirmation, additional confirmations there, and then you take the trade. You could draw like a Fibonacci, and then this could be like your 50% range of the Fibonacci, and then you take a trade here, and then you take it down. Those are the two ways you trade this, and either one works. Just know that once you see this pattern in an uptrend, just expect a reversal. A reversal is coming, right? So find these patterns on the charts, right? You guys need to find these patterns on the chart. You need to backtest and backtest and backtest. The more you backtest, the more your eyes will be programmed to see these patterns more clearly. If you don't backtest, you won't be able to spot them and identify the right ones from the wrong ones, and when to look for these patterns or stuff like that. So we need to find these patterns on the chart and make at least 10 screenshots, right? Make at least 10 screenshots. So when you're backtesting screenshots, the pattern, find like at least 10 or more. If you go past 10, that's even better. Then look for take screenshots, highlight them just the way you see me. That's the way you see that I highlighted all this here. Just highlight them like that, make screenshot like this, highlight them, and look for your put your entries and your exits and make the screenshots, and you should be good to go. So anytime you're looking for that setup, then you just look at your screenshot and match them up with what you're seeing in the chart live, and then you're good to go. So that's basically how it is, and that's it for today's video. Like and subscribe if you found this video helpful. Like and subscribe, and leave a comment what you think about the strategy, and let's get to it.